Hi, when we do our technical analysis, the first common question being asked will be which time frame should we use for our analysis? For example, we have minute charts, we have hourly chart, we have daily chart, we have weekly chart, we have even monthly chart. Which one should we use? Hi, welcome to our excellent trading and investing YouTube channel. My name is Ting Ting. Please remember to subscribe to our YouTube channel and please on your notification bell. Let's start with our today's topic. Which time frame should we use for analysis? Now, before that, at the end of the session, we will also look into details whether selecting a time frame is it that important or not. I repeat my statement. Before the end of the session, we will also identify whether by selecting a time frame or to select a time frame is it important or not. Now, before that, let us understand what are the 5 common time frames available. So during your analysis, we have these 5 common time frame. The first one is tick chart. Tick chart meaning every movement, whether it's a buy or sell, so long as there's a price movement, we consider as a tick chart. Second one is minute or minutes. For example, if it's 1 minute chart, 1 bar considered as 1 minute. If it is a 15 minutes chart, then 1 bar considered as 15 minutes. Maybe let's say, for example, the opening of the 15 minutes, the closing of the 15 minutes, then the high and low within that 15 minutes itself. Now, the third common time frame is hourly chart. Hourly chart meaning 1 bar representing 1 hour. For example, if we selected 1 hour, then 1 bar representing 1 hour. If we have selected 4 hours, meaning 1 bar representing 4 hours. So let's say if it's a 1 hour chart, 1 bar representing 1 hour. So the opening of that particular hour, the closing of that particular hour, and within the hour, when is the highest level and when is the lowest level. The fourth time frame will be daily chart. This is the most commonly used chart. Later I'll explain to you. So daily chart meaning 1 bar representing 1 day. So today, for example, what is the opening, what is the closing, what is the highest, and what is the lowest price for this particular day. And the last one will be weekly chart. We still have even monthly chart, yearly chart, etc. But these are the 5 common time frame being used. So first thing you need to understand, these are all the common 5 time frames. So the question is, which time frame should we use? Later we will look into it, whether is it important for us to consider time frame or not. But before that, we are going to take into 5 major consideration. Meaning when you want to select which time frame to use from daily chart, weekly chart, hourly chart, minute chart, which one you should select, actually you need to take into consideration these 5 major consideration. But in our opinion, our 5th consideration is the most important one. But we are going to go through one by one. For us, normally we don't really agree with, for example, if you are a swing trader, you should go for daily chart. You are a swing trader, you should go for minutes chart up to hourly chart. Or you are a scalper, you need to go for minute chart or even seconds. For us, we don't really fix that, but rather that when you select a time frame, you need to take into these 5 major consideration. Now, the first consideration that we think is important is ourselves, which many traders don't think that's ourselves we should need to take into consideration. I give you some example. For example, let's say, for example, your friend said, hourly chart is very useful. I make a lot of money through hourly chart. But when you use it, you find that normally I can't make it. One of the reason behind is because, you see, if you are taking yourself into consideration, sometimes our own performance or our own characteristic doesn't suit to go for shorter time frame. For example, why? Because of the market noises. From the market noises itself, it can be concluded that, for example, you need to cut more. Meaning that throughout the day, you might think that always you need to cut loss. There's no profit trades, etc. So sometimes, if you're not suitable to go for shorter time frame, don't go with that. If you're suitable to go with shorter time frame, not longer time frame, then you should go with shorter time frame. So first thing, you need to take into consideration of yourself. So ourselves, we also need to take into consideration, and we find that it's quite important as well. Now, second major consideration is time. What does this mean? Meaning that, for example, if you do not have much time to be allocated into trading or investing, try to go for a longer time frame. If you can spend most of your time into intraday or trading or investing, then you can go for shorter time frame. Now, for example, some of us, we have our own family, we have our own career, we have our own job, we have own leisure time. So most of the time, we can't even sit in front of the trading platform and do our trading. So with that, for example, if you insisted to select, for example, 5-minute chart, but when the indicators indicates that actually you should trade, but during the time you're not free, so it might not be suitable for you to go for a shorter time frame when you do not have the time to be allocated for your trading or investing. So this is the second major considerations that you need to take into consideration. Now, the third major consideration, dang dang, which is your frequency. Now, your frequency of trade is very important, meaning that in a way I convert to something that more easier for you to understand is the number of trades. Now, certain people, they are not suitable to go for a shorter time frame, because if you ask them to trade every hour, every minute, they might find that it's very taxing. Certain people, they are not suitable to go for long-term trading. You know why? Because if one day they don't trade, they find that it's very uneasy, hand very itchy. So this type of person, you need to know whether your frequency of tradings, which level of it you should be allocated. For example, if you need to trade more, then you need to go for a shorter time frame. But if you trade less, you can go for a longer time frame. For example, if every day you must trade many trades, then you should go for shorter time frame, anything less than daily. The time frame less than daily. But some of the times, most of the time, right, let's say at the end of the session, you find that you trade many trades, but at the end all went to brokerage. So you need to select whether is it suitable for you or not, the number of trades. Certain people you should go for a shorter time frame, but certain people you should go for longer time frame. I would say majority should go for longer time frame, because shorter time frame, not many traders can be successful in a way. Now, number 4 is the market volatility. In short, also we can consider from product perspective. You can understand from the market itself, right? Some of the products, they are more volatile. Some of the products, they are less volatility. So from that perspective, for example, if you look from Malaysia perspective, like for example FKLI itself, the market on average is less volatile, especially compared to FCPO. We don't consider for FKL recent 1 year or recent half a year. Before that, on average, let's say on average for 10 years, their volatility is lower. But for FCPO, the volatility is way higher. For example, recent market, on average daily high and low, it can go up to more than 100 points. So from that perspective, if the market is more volatile, you can go for shorter time frame. But if the market is less volatile, you should go for longer time frame. So in short, is lower volatility. In a way, you should go for a longer time frame, because sometimes the opportunity is not there. You can't even trade. But if the market is volatile, you can even go for very short time frame, because even shorter time frame, the volatility is there. It's easier for you to make or profit from the market itself. So volatility is one of the consideration that you need to consider. And before we go into 5th consideration, which we find that is very important. What is this consideration? Is your performance. Now, in short, we find that this consideration is the most important among the 5 considerations that we already highlighted previously, from number 1 until number 4. 5th, performance is the most important. Why we say so? In short, for example, when you backtest all your time frame from your mini chart, hourly chart, daily chart for that particular product itself, you notice that if their weekly chart, the performance will be better than your daily chart. Are you going to tell me that you're going to still select daily chart or not? Because at the end of the day, the main objective of why many of the traders or investor or even retails you are trading is because you are prioritizing your profit and loss. With that performance, if let's say my weekly chart perform better than my hourly chart for a particular product, definitely I will go for a weekly chart rather than I go for a daily trading. So performance meaning that you need to backtest which one performed the best for the indicators that you're using, from the products that you're using, whether 1 minute chart is better, 5 minute chart is better, or daily chart is better, or even tick chart is better. So performance should be one of the major consideration, or in terms of priority wise, should be the first priority that we need to take into consideration. Now, before we end, we have one very important conclusion. Whether selecting a time frame, is it important or not? Now, this is the question that you need to think. Meaning that before I consider whether which time frame should I select based on this five major consideration, is it selecting a correct time frame? Is that important or not? Now you'll be very, very surprised. For our conclusion is any time frame they can perform as well. So don't spend too much time into just to make a decision which time frame to use. I give you an example. Some of the traders, they start with 15-minute chart, then they find that they cannot make money. They thought that is the time frame that they selected is wrongly. Then they will start to shift to hourly chart. Then they go through the whole process again. Then subsequently they cannot make money, they move to daily chart. Then keep on cannot make money, then they go back to the whole process again. But for us, when it comes to selection of time frame, you should take a very short time period, just then make a decision on which time frame for you to select. Then you just go with it. Because when it comes to trading and investing, we find that your trading strategies, your trading system, and your trading plan, they are more important. Why? The first level is, when it comes to the whole trading process, is to identify the trading tools. Now, this time frame not even reaching the first level of trading tools. It's only part and parcel of it. So don't spend too much time just to select a time frame, because you see many of the beginners or traders, they spend a lot of time just to select a time frame, and they thought that it's the time frame that caused them to lose money. It's totally two different things. And based on our experience and based on our backtest results, we find that time frame doesn't make much difference when it comes to your profit and loss. So in short, if you do not know which time frame to start with, just start with the common one, which is a daily chart. At least not that in a way that they eliminate many of the market noises, etc. So start with the most simple one or most common one, which is a daily chart will do. So our session will end here, but before that, please remember to subscribe to our YouTube channel and please on your notification bell. We are going to see you in our next YouTube session. Bye.